you do whenever you launch, take off on a plane. You check the engines, you check all the screws, you make sure everything's in place, you have a checklist. That's what we're doing here. And today is going to be a fascinating day because we've already had a reversion at 8:30. Market moves all the way down to 648 on the SPY. After the news on the jobs report, shoots right back up. We're going to talk about that and more as we always do. We'll do more momentum. We'll do the runner at 9 a.m. And remember, you have to be in the room to get the runner. We'll put it in here. We'll go through it together. And then we will set up for VWAP. Yes, there's no video evidence of anything. Man didn't do anything wrong. Remember, you are the exit liquidity in these markets at 9:30, so it's very important that you join us every day at 8:45. Whether the market's safe or to trade or if it's trap day, we're going to talk a little bit about that. Obviously, this jobs report coming in weaker than expected, and of course, the market moves higher because bad news is good news in this environment. We'll explain why. We'll talk about where the smart money is positioning, and we'll go through our top trades and screeners, as always. Good morning, Doji. Good morning, Ed Mines. Larry. Hi, Don. Rosario. I know Erica Northport is flying around and people are paying very close attention to Lululemon. I assure you, we will be talking about that momentarily. But first, on the momentum side, the S&P 500, NASDAQ, and Russell are all green, but we have these weaknesses, right? And again, just because the figure is negative doesn't mean anything. Simply what we're looking at when we see a negative figure can be lower moves on the S&P 500 at the bottom 493, 495 stocks. So once again, what we're looking for in this environment, and obviously momentum will have changed in the last 10 minutes because of that jobs report. What we're doing here, we're looking at stocks that are on the S&P 500, stocks that are up on the month, stocks that are up on the week, at least 5%, and a beta of 1 to 2. What does that tell us? It tells us the number of stocks that are out on the end of the bell curve that basically have breakout potential and have been moving relatively quietly. Most people aren't paying attention to the ends of the bell curve. They're watching what's happening in the top 10 stocks in the S&P 500. But as you can see, the stocks that fit this mold right now, Google is a much higher beta stock, so I should include that. I apologize. I'm going to go over 1 just to give it a little bit more mathematical certainty right now, just so that we can include some of these names. Actually, what is their beta right now? You learn something every day. Beta is at 0.98 on Google. Anyway, so let's just put this at 0.9. I'm not going to not include Meta or Alphabet. Western Digital, Williams, Lennar, all the housing stocks rising. Very good opportunity to be selling put spreads and taking premium on some of these names. This has been the momentum trade that we've been talking about since April. All of those companies at the housing level were all in the 13Ds when we did that insider week. Significant amount of pressure has been lifted on the housing stocks, basically on the back of lower interest rates expectations. So you're at 15 names there, as we noted, and now you flip this around, and let's look at the number of stocks that are down. So 15 against 10, that gives you positive 5 at the moment, so that's a nice little move to start the day. NVIDIA, however, is in that weak zone. So is CrowdStrike, so is Advanced Micro Devices. It's very important to be paying attention to the size of the market cap of the companies with those outflows. And GEV, which was a darling for us at the start of the year, coming off of our trip out to Utah, GEV has been selling off as well, as has Datadog and some of these other software application and advertising names. So when we're in this environment, what we start to do then is obviously look at the FNGD. I got an email from somebody last night saying, hey, this hit a new low. Why are you paying attention to it? There's a reason for it. It decays. It's a leveraged ETN. When it breaks out, there's a problem. When it's breaking down and continuing to move lower, it's signaling that leverage continues to be strong within the top FANG stocks, and we're not seeing an unwinding of those positions. We are now currently under the 20-day moving average by 9%. Capital continues to flow, and you could see it in the SPY if you really want to see it. Just look at the SPXL, which is the leveraged ETF. We tapped that 50-day moving average. We've moved back above that 20-day moving average, and now we're seeing strength this morning. 1% move because it's leveraged, which means the S&P 500 is up roughly 0.3 2.4%, and momentum remaining strong despite the weak jobs report, which we will get to in a moment. All right. So as we look at that, obviously markets are climbing because we're not hiring everybody. Hey, congratulations. S&P 500 hit a record high, NASDAQ, Dow also rising. Investors awaiting that jobs report. That jobs report came today at 8:30, and it showed us that we only added 22,000 jobs in the month of August. This is lower than the ADP number that came out yesterday. And as a result of this, one of the other reasons why the market is moving higher is because the 10-year bond is dropping. The 10-year bond has now fallen because of concerns about the broader U.S. economy. The 10-year bond is at 4.09. Okay, so the risk-free rate, the 4.1% level, is moving lower. So that means that the 10-year bonds are moving higher, and that's good for bond traders. Equity markets continuing to rise as well. Bond prices moving higher. Stock prices moving higher. Not supposed to work like that all of the time. But that said, we continue to watch this market just continue to peel higher because right now the expectation is obviously rate cut. So now the odds of a rate cut today, and this is a very important chart. They're priced in right now, 98% probability of a rate cut in September, 2 weeks from now. Here you go. Now we're pricing in a 50 basis point cut. That's the good news for the market. And it doesn't last long, but for right now, the optimism is now going to start to be around, are they going to go 50 points? And the reality is this: if they're cutting 50 points, they're behind. They're way behind. Now, Powell has already signaled during that Jackson Hole meeting that they are going to focus on the jobs market. We have to now pay very close attention to the CPI numbers that come out in a week. But for right now, rate cut expectations remain elevated. We are now fully pricing in a rate cut for September, but that is only 22,000 new positions in August, worse than expected. And those dovish expectations for rate cuts reinforce the equity rally. In addition to that, the expectations of cuts, particularly at the lower end of the curve, fuel more leverage in the system, more tallying up of short-term duration bonds that allow companies to go to the repo market, borrow cash, turn around and buy FANG stocks. It's all self-fulfilling prophecy, and it's all very backward. On top of this, as we look at today, few very important things. Broadcom absolutely rolling, and look for Broadcom to be very strong through the duration of this day. I have been talking about Broadcom for the last 2.5 weeks. Very strong numbers coming off that break above that 20-day moving average, meeting a lot of the technical and fundamental analysis that I'm looking at. We're ignoring PE. We're ignoring cash flow. We're only focusing on the F and the Z score. Very cash-rich business. And as you can see, was looking to sell spreads to the downside. Remember, if you're selling spreads and the stock rips higher, the value of the spread that you sold goes down. You can then buy that same spread back and pocket the cash. That's why selling spreads is a compelling strategy, particularly for people who want to own a specific stock at a very specific price. Broadcom moving higher. Look for the semis to continue to be strong. The SOXL, which is what we focus on for the individual semiconductor stocks, now breaking above its 20 and its 50-day moving average. Look for money to start to flow back into those names over the next couple of days. And that includes NVIDIA, which, once again, NVIDIA now down 1.6% to start today. I want to show you today at 9:10 how to trade volume-weighted average price on a name like NVIDIA for a day like today, a Friday, looking for a reversion if we get those opportunities today, and I anticipate that we will, based on the fact that this stock continues to peel off the way it does. On top of this, you have Lululemon. No surprise here. Luxury pants not doing well. 20% decline after a big run that we have seen in recent days. Coming off that 196 up to 206, we are now down to 164. Oh boy. Is this something that you buy the dip on? I don't have that answer yet, but I will tell you this. We're going to be watching the RSI and the MFI, and we're going to be paying very close attention to whether or not both of these indicators get into oversold, and that will create a hero kind of bid. On top of this, this is another name to be watching on volume weighted average price today. So if we go to VWAP and we type in Lulu, here you go. We're selling off to start the day. Relatively sizable moves. Look for any moves down here into this range of 161 up to 163. If we get down here, this is a possibility that you're going to see short covering, and you might see some bottom feeding at some point today. What you're trying to do at this point is if you get down into this fourth band, what you want to do is buy the in-the-money call that expires today. So there's going to be implied volatility crush over the first hour. Look for the options prices, particularly for today, to come down. And then from that point, what you're looking to do is just trade the stuff that is already here, down here, fourth deviation line, keeping a tight stop and looking for some sort of move either back to the 20 moving average of the Bollinger Bands or at least back to volume weighted average price at some point today. A lot of funds like to try to wait until we get back to VWAP in order to unload positions. They have not had that chance today since we saw that earnings report. This continues to bleed off, but it will be worth trading at some point today. Add it to your list. Make sure you're on top of it. All right. Here's the big one. This is T. Rowe Price. And good luck, America. They're coming for you. T. Rowe Price popped yesterday after Goldman Sachs invested up to $1 billion in T. Rowe products. And Don, you already know where this is going, don't you? This is not a rant, I assure you. But key thing, as we look at this, what does Goldman Sachs have a lot of that it needs to sell? Alternative assets. What does T. Rowe Price have? $1.7 trillion in retirement funds, right? Okay. They put this thing out yesterday, and they said Goldman Sachs and T. Rowe Price are engaged in a quote, and I quote, a strategic collaboration aimed at delivering a range of diversified public and private market solutions designed for the unique needs of retirement and wealth investors. I've read fortune cookies with more specificity than that. Every paragraph in this report is weaponized corporate nothing speak. Terms like solutions orientations, unlock the potential, drive solutions, and they don't actually tell you what the hell they're actually doing. Let me make this very simple for you. Goldman Sachs is going to stuff as much private equity investments into everybody's 401k as possible and extract as much money as possible. It's shocking that this is happening because T. Rowe is one of the most conservative financial institutions on the planet, and they've let the wolf in the door. There has been a huge bet that account rules are going to change right now to allow more alternative investments. We've already seen this. There will be people who have been lobbying since 2007 to argue that adding private equity into 401ks will democratize investing. Ron Howard voice, it didn't democratize everything. Private equity firms have been salivating over the $35 trillion in retirement funds, and the American Investment Council, which is a lobbying shop in D.C. that represents private equity, has basically just been doing this for 15 years. They don't have anybody else to burn. Pension funds are tapped, endowments got burned, institutional money keeps asking where our money goes, and the big problem with this is people who understand private equity. I studied Kaya. I know the space. I've covered it as a journalist for 15 years. I'm comfortable with private equity. The firefighter doesn't understand private equity, and they're not going to care to learn. So as you look at this, remember, private equity locks up 7 to 10 years. See, if you're 72 and you say, hey, I need my money to retire, and they say, well, unfortunately, your money is locked up in a leveraged buyout of dental clinics, check back with us in 6 years. The problem with private equity, though, is the sequence of returns risk. And that's something that every single investor needs to learn about. When you retire, what are the sequence of returns risk that impact your money? Because if you have a stock market downturn, the moment that you retire, versus having it happen 7 years, your outcomes are going to be very, very different and very, very significant. People should be looking to build at least 3 years of cash ahead of their retirement anyway. This will not allow it. The other thing is that private equity is 2 and 20, meaning they take 2% fees, 20% of profits. The average Vanguard, 0.1%. So this is a huge shift, and this is something that I want people to be aware of now. Be very well aware of this. If you are going through your plans, you need to do a lot of research, and you need to understand that this is coming down the line. Even the most conservative retirement companies in the world are going to start partnering with private equity, and you have to be aware of this, because I guarantee you retail is not going to get the best deals. The best deals are for the people who pay for them. The best deals are for the institutional money. That's never going to change. It's just the way the world works. And if that's the way the world works, we have to either do it ourselves, or we just have to be aware of the things that are being sold to us. So I will be writing about this a lot more in the next couple of days. I'm actually very shocked that this has happened, but at the same time, I'm not shocked at all. Finally, PepsiCo. A lot of people are going to be asking about this. I did get a couple emails about this morning. PepsiCo, Elliott Management, which is an activist hedge fund, came in and wants to spin off the bottling business of PepsiCo. Doesn't sound like a really big deal. Here's the thing. The default go-to for a company like Elliott to try to get, unlock value through a company like Pepsi, they will come in and they'll make some sort of obvious statement. Hey, if spin off your bottling business, that's going to unlock value. Now, Pepsi's going to come back and say, absolutely not. The big question is, what is Elliott's big ask going to be? They don't do it off the bat. They go in, they try to get a board seat, then they push for something bigger. Now, they could do something as revolutionary as tie the executive compensation to return on invested capital instead of revenue. I'm not going to get into the math, but basically incentivizing capital efficiency at the business, making sure that they're allocating every dollar in the right way, how executives should be paid. That will immediately meet with a significant amount of resistance from the executives. So what is the big ask for PepsiCo? You split Frito-Lay from Pepsi. That's the long-term play, and everybody knows it. Everybody knows that Frito-Lay is what drives Pepsi's business. If that happens, you want to have a strategy in place to trade Pepsi. And for me, again, I go back to the original idea is if you hear this or there's any speculation, you're selling spreads on Pepsi to the downside 20 to 30%, because if this company does end up breaking up, it will be very profitable for people who just kind of take what the market is giving you and just collect the dollars that you would get from basically betting against the deal happening, which is exactly what a lot of people will do, because they'll look for some sort of clauses or way to break it up. But again, the management is under pressure to add and unlock value. The most logical way for Pepsi to do that is to either siphon a lot of the stack businesses, let go of some of their smaller brands, or do the nuclear option, which is what they should have done years ago, make Frito-Lay its own business. All right, where is the runner? Okay, Timothy. Gosh, man, I'm running a little behind. Ooh. Man, high demand. I'm just kidding. All right, so today, HIMS, HIMS, very strong momentum stock, has been at the heart of a lot of just great trading this year. You're now above that 20 and that 50-day moving average. And right now, what we're looking at here is the 20 and the 8. So let me split this up real quick and move this over to a 50, because what I'm doing right now is just looking for short duration momentum, pushing back above that 50-day moving average. Set the stop here. You can even stay in the money on a higher delta option and sell to the upside. What is the upside? Well, you can see this thing has run on momentum a couple of times up into the 60s. I like just buying the stock and setting the stop back here, right here at 46. Good little trade. You could see this is chopped around multiple times, but when it breaks out, it does break out, and you're obviously above that key moving average right now of the 50-day. So buying the stock, I'm going to buy the stock here at 46 or 48.82. And I'm going to set my stop back here at 46.55. Walmart looking strong. And this is actually a pretty compelling one, given the fact that we are coming out of this weaker jobs report, Walmart is the single largest grocery store in the country, largest big box retailer as well. Continued strength. Look at the very strong momentum that we have right here. RSI, MFI, all improving. Histogram on the MACD turning positive. Again, another type of way to trade this. Buy something that's in the money. Buy the 99 and hold it for the next 2 to 3 weeks. You're looking for a move up to about 104, up to 105. If momentum remains strong, you'll see the 20 and the 50 start to climb alongside these moves, and you set a very tight stop of 15 to 20%, looking for a potential upside here on strength. Let's just do a real quick mathematical analysis of here. Long call on WMT. Let's stay in the money for the 19th. We'll go with the 99. And this will give you the mathematical breakdown of what your expectations are. Remember, I said for WMT, looking for this to get back to overbought territory. Maybe you'll move to 104. What you would see is you break this up a little bit. You move this to, say, 105. And you could see what your upside and what your downside is if the stock does peel back. At 105, the trade is 104, forgive me, is up to about 86%. And here back at the break-even level of 98.83, well, here you go, 50% loss. I would keep a stop very tight, somewhere back around that $100 level for Walmart, and staying in the money with the $99 call. MBLY, Mobileye, breaking above these key moving averages. Not a name that I really follow much. I don't know much about what this company does. I didn't know they were in auto parts. It doesn't sound like they're in auto parts. It sounds like maybe they say they're in auto parts, but they probably operate a series of web. What am I looking for? So they're probably operating satellites and watching me right now. So definitely recommending this stock, guys. Definitely recommending it. We good? Thank you. Okay. 15 stop right here. Mobileye, whatever it is. We love it. We love it. Great. Good. Are you in that TV over there? They're in my TV over there. $15 call. All right. Autonomous vehicles? Sure they are. You're definitely in autonomous vehicles, right? You're not in my television. You sure? Well, they're talking to me, I think. I don't know. We'll find out. All right. On top of that, we are looking to the downside on TSN. Tyson. Oh, chicken company. I don't like having to short Tyson, but I feel like I missed this a little bit because I'm always looking for the move from the 20-day down to the 50. So what you're looking for here is weakness to the downside. You've seen this chop under its 50 multiple times only to rebound. So I'm going to scratch this a little late, sloppy track. Unless we get under that $56 level, only then would I go to the short side. I'm actually looking for this to actually bump back above its 20 and take us maybe back to that 57, 58 level. Ride it both ways. Rocket Lab, somebody was brought this up earlier today. Rocket Lab is chopping about, big move down under that 20-day moving average. This is very difficult because you're kind of in no man's land at the moment. Which way is it going to go? I would still do the exact same thing that I stated. Either this is going to bounce off its 50 for resistance, and then that would be the place to buy it. So that's at $42. Or we're going to break back above that $45 level. Rocket Lab announcing new launch. I'm telling you, Rocket Lab and Mobileye are doing it together, aren't they? They're in my TV. I know it. Rocket Lab and Mobileye together. Definitely coming for me. Not paranoid at all, everybody. Okay. Let's see. Everything has to be a bit. My wife said that to me last night. She said, "Is everything a bit with you?" I said, "How long have you known me? Any opportunity to do bits, I'm going to take it." All right. I said that I wanted to do like more of like a Anderson Cooper type of thing for finance. Maybe I just want to do Conan O'Brien. We're under the 50-day moving average on BKV. Energy breaking down. We go back to the OIOU, which is now cracking right at that 20-day. Once again, just a reminder, you're looking for the RSI and the MFI to be elevated to go to the short side. Energy breaking down right now because of economic concerns. BKV is obviously a name I haven't heard of much. I don't even know what they do, where they are, and I'm not going to spend the rest of my day looking them up. Small cap energy, so really not as much momentum that I'm looking for. Very high beta, but this is more of a stock that I'm going to try to trade to the upside in the event that we have oversold conditions in the energy sector. It is breaking down, no doubt about it, but I can already tell you right now, there's no way there's much of an options chain here. So you got to move back to companies like Apache. You have to move back to companies like SLB, Schlumberger, which is now down to 35.55. I'm looking for a break under these key moving averages before I take action on them. Broader side of this, XBI biotech stocks just continuing to move higher. Cash-dependent companies that gain traction as the rate bets ease funding pressure. So virtually everything across the board should be ready to roll here. Look at RXRX. This is actually where I would buy RX right now. Very small cap company, ties to NVDA, the CEO, very high short float. And now with the positive move and the positive news on the biotech, my stop's going to be back at $4. So that's about a 15% decline. But my upside here is going to be up around 650 up to 7 possibly. So RXRX is going to get a bid today. I'm going to keep a tight stop on it. This is one of the names that we keep returning to whenever the LABU strengthens and just pure momentum remains here in the biotech space. Things that are breaking out as we go through the groups. Technology is obviously going to be the big beneficiary today because of the leverage impact, but communications looking a little bit stronger today. You can see the consumer cyclical is doing well. That's going to bring RCLH and CCL and those names back into the fold, those high momentum cruise lines. Basic materials, better, good. Seeing gold continue to rise. The GDX is looking very strong. We continue to advocate selling spreads on the GDX. Finally, you have the weaknesses. The defensives have really looked weak, obviously, in the last 24 hours. I would not be shocked to see some strength start to return to that space, but it's the staples that are under pressure, and it's the utilities that have been obviously under pressure the last week. Rotating small caps into rate sensitives, obviously with expectations now, heightened expectations going from no percent to 2% on the possibility of a 50 basis point cut. If that starts to run higher, this market can run. STRT is in our momentum names, Stratec Security Group. Don't know what they do. They claim that they're in auto parts. What is going on? Feel like I'm being trolled. So Mobileye and this company definitely are in this camera. Consumer cyclical auto parts company pushing above that 20 and the 50-day moving average, looking for continued momentum. Not a huge short float, but enough to warrant my attention. Strength, obviously, on the RSI, improvement on the MACD, but volume remaining weak, and that's problematic for me. But still, worth a bid. Keep a stop back here at the 67, 68 level, KINS. Auto parts maker with strong momentum, clean break above the 20, use MACD cross as a trigger. There we go, already in there. Kinstone Financials, good company, 1430 property casualty. I think that everyone should be paying attention to the property casualty names. Very rate sensitive play, bigger break above that 20-day with rising indicators. We do have room back to that $16 level. And again, we're watching the MFI, RSI, and MACD improving. All three of these are improving at the same time. Stop back here at that 1420 level. And good old friend PLAB, Photronics. I love this company. It has been a great momentum stock to trade in the past. It has struggled this year because of cyclical uncertainty, but this is a supplier for ASML, which is running its own basic monopoly in the foundry business. Very strong 3-month momentum, back to the 20-day with upside, looking back to $24. So different ways that you could possibly trade this. This is one of those specials that I like, where you sell a spread to the downside, collect the credit, and then speculate to the upside with a call. I believe that is called a, oh, what was that? Something drag. What was Broken Lizard? That was Lizzie over at Tasty. It's called a Broken Lizard. You're selling a spread to the downside, collecting the premium, and buying a call to the upside. So interesting way to trade this. All right. Mobileye, Hogs, MDB, self-driving rockets. We're going to actually dig deeper into that jobs report later today. I have a feeling that, once again, same rules, same news, what we already know. It's probably all jobs tied to the healthcare sector. Real quick, I want to just dive into this real quick, just so that everybody understands what we're looking for today. So yesterday, as I've said in the past, Mr. Stanley Druckenmiller has noted that when these algos start bidding, they're doing so down at the third and fourth standard deviation. He pointed this out in 2018 with an interview with Real Vision. So if you don't have this set up, make this a priority today. We have a video on how to do it through Thinkorswim, but I was again trained on TradingView. So let's add this real quick and just show you volume weighted average price. You type in SPX, your indicator. You have a 1 minute here and you have your candles, VWAP. Okay. Blue line, volume weighted average price. That's the institutional anchor that we're always talking about. The first lines that pop up, those are the first standard deviation of price, the 1 minute price. Then we're going to edit this, and we're going to add the second band and the third band. And as you can see, when we get down into the third band on the SPX, look at the reversals that happen. Same thing that happened yesterday. Looking to come down here and tap off that third to fourth standard deviation line. Looking for a reversal. Now, every single stock in the S&P 500 today has an option that expires. NVIDIA, Tesla, all those big names, not only do they have options, they're very tight spreads. These are very highly liquid stocks. And they're so liquid that very soon they're going to have 3 times a week, they're going to have options expiration. So what you're doing with the SPX is when the SPX touches that line, you're flipping around. This is what I do. You can trade other vehicles, but I trade the SPY. And what I'm looking for is simply to buy whatever is in the money at these levels. When the SPX has hit its line, I'm looking to bid in here. 643 yesterday went up, I believe, from around $1.50 up to $3.40. So there are 100% moves here, and they happen quick and they happen violently. And it's not just going to be the SPY today. It's going to be everything. And Lulu is going to be in play. If Lulu sells off, if we see a big move to the downside, what do? Lulu has options that expire today, right? Now, again, in the first 30 minutes, the implied volatility crush is going to happen. So you still might be paying a little bit of a premium for some of these options. That's why if you're trying to speculate on day reversals, you want to make sure that you only do it down here. Don't try to speculate around here. Do it down here. If this does rebound today and you're looking to actively trade it, if you miss down here or it never gets here, only focus on where it is above the blue line, which is volume weighted average price. So if we bounce down here and we start to rise again, you're buying an at the money call at around 166, 167. You're keeping a tight stop right back at the exit here, which is the blue line. You might lose $5, you might lose $15, but at least you're not losing 100%. And you're looking to ride this higher and sell whatever you have along each line, which is another standard deviation. So lots of way to trade this. We talk about this all the time. I will be back today at 3 o'clock. We're hopefully going to have better internet. We'll be outside today. It's going to be very nice. It's going to be very relaxing. It's going to be fantastic, according to Ross. And Don will be up very soon at 9:30. He's going to throw some music on right now. Again, click the link to catch up on some of the other things that are going on within our business. You want to be a member of this. You want to be here every day. This is going to be a very active day. So if you're not a member and you're not in the main room with us every single day, again, we have the opportunity for you to get a great deal today for our membership. And you want to be busy next week. We have CPI coming up, and then in 2 weeks we have Third Friday coming up. And that is historically a very busy week. We're going to start to see earnings expectations start to come out. We're also going to have the Fed decision coming out. So September, very busy, very difficult month to navigate by yourself. Be a part of this community. Sign up, be a member today, and take advantage of what the market is giving you. And we educate you on that every single day. All right, everybody. I hope you have a great day. I'll be back again at 3 o'clock. And if I don't see you today, I will be back on Monday, 8:45 for Market Masters. Have a great day.